Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:45 in the a.m. Eastern Standard Time. And what we're going to talk about this morning, primarily, well, first off, anyway, is IBM. Then we'll take a look at the pre-market futures, and then I want to talk about yesterday's closing price action. I put together some commentary from members which did not come out right. The video sizing was inaccurate. So I'm going to review the overall averages again in a moment. So stay tuned on a closing basis, not on a real-time basis, on a closing basis. So let's get to it. IBM reported earnings yesterday or after the close yesterday, and the street wasn't happy. While they did see growth in their cloud business, I believe it came in less than what was expected, and there were other areas, their global business, which was fairly weak. Now, IBM is not the bellwether it once was. You know, if this would have happened, this report, if it would have happened 15 years ago, the markets would be in free fall right now. But IBM is not the IBM of yesteryear. So I wouldn't put too much on their earnings report. Now, were it a Microsoft, were it an Amazon, different story. Now, this morning, we are weak. No new low versus yesterday's or the after hours closing low. But we did tap the lower band of the third standard deviation Bollinger Band, and the expectation of a pop was very, very high. And there's a good chance, especially since, unless they just announced it, that we do not have a deal. There is no deal out of Washington. Nothing that I could see. I know they were negotiating last night. And yeah, just more of this stuff. They make progress. They're never getting anywhere. What Pelosi wants to do is to bail out the failed states. And I think the president is absolutely right. Don't bail them out. They burn down their own cities. Don't bail them out. I don't want to pay for it. Heck, I live in New York. I don't want to pay for bailing out Manhattan. They burn down themselves. I digress. So what I'm looking for here is a potential pop off of the lows, because if you pull back, we do have support at these levels going back to not too long ago, earlier in the month. You had that one big surge, pulled back. Now we broke down below. That's a bad line. This low. So what do we have? Lower highs and now lower lows. Next stop. We're right there. So we'll take a look at a daily chart in a moment on a closing basis to identify where we may have historical support below. J.A., good morning. We'll have stimulus today. I believe you're right, and I'll tell you why in a moment. I think that the currency markets are telling us there will be a deal. You know what? We're on the topic. Let's go to it. I'll go to the IBM's daily chart in a moment and identify where I believe there's going to be support. I may even do a separate video on this later on. If you want me to do a video on IBM, please click the like button so I don't waste my time. If there's no interest in it, I'm not going to do it, but I'll do it tonight. IBM closing price action on a daily, weekly basis, and we'll identify where we have critical support after the close today, but I will touch upon it briefly in the pre-market here. So again, smash the like button if you want me to do a video on IBM. All right, let's take a look at the dollar. And this is why I said, J.A., that I believe that there will be a deal because the dollar is getting pummeled this morning. We are breaking critical support. We are at the lows, or we have tested the lows of last week. So we continue to put in lower highs, lower lows, and now we're at the precipice of breaking down to a new lower low. Now, we had an opportunity, and we still have the opportunity, to have formed an inverted head and shoulder setup. Left shoulder, head, right shoulder. Here is resistance that it would need to break through at around 93.59 on the Dixie, but it looks as though it's going to fail to do so. If I had to put a nickel down, I think we fail here on the dollar. And how will stimulus affect the dollar? It's dilutive. So basically what the Federal Reserve is doing right now, there are no dollars per se in the Treasury to be distributed amongst the populace or to bail out an airline. So what the Federal Reserve is going to do is, and they freely admit this, they're going to print up digital dollars. That's where we're going, digital dollars. And basically that dollar you have in your pocket right now becomes diluted by a factor of X. What that is, I'm not quite sure, but it's not a good one. Once we print, let's say they agree upon $2 trillion. However dilutive that is to the US dollar, it'll be reflected on this chart here. Plus, not to mention the future anticipated diluted amount of dollars they'll need to print in order to keep this ridiculous market aloft. Now, it's great for us to keep this party going. There's this heroin-fueled stock market rally going, but this is not going to end well. It's going to end horribly. And the more they print, the worse it's going to be. And the odd part is, not only is it going to be horrible, more and more horrible each time they print, the more they print, the less impact positively on the market and on the economy you get. You need bigger and bigger rounds of heroin to keep that high going. I digress. I'm getting off into the woods here, or the weeds. But this is bad. This is very, very bad. I mean, take a look at the U.S. dollar, right? Down. Take a look at bonds. This is a vote by the global economy on America. Do we have confidence in their currency? Obviously not. It's declining. Do we want to buy U.S. bonds? Obviously not. They're declining. Yields spiked up higher yesterday. Bonds weakening. That's a 10-year. Maybe they're looking out 30 years and saying, you know what? Maybe there's some hope for the U.S. economy. Let's take a look at a 30-year bond. Nope. Weak and getting weaker. This is not going to end well. Gold. I think gold may be breaking out here very, very soon. It's getting very comfortable at the 1900 mark. Good morning, Paul. Now, I've been going back and forth with regard to gold a bit here. We lightened up on our gold mining trade a couple of weeks ago. We're looking for a re-entry point. But it's just a nice consolidation here. And the fact that we have an election coming up, which is going to be, I don't know. I mean, I've been around for a couple of years now. I don't even want to go into that. But I've never seen anything. For those out there that are young, this is not what America is all about, what you're seeing right now. I have no idea how this snuck up and sucker punched us. But the fact that we don't know, or we're probably not going to know who the president's going to be on November the 4th is a travesty. Thanks, Paul. I appreciate that. Thank you. A bit, I was thinking about the video. Folks, if you're not familiar with what Paul's talking about, I put together an RSI video. and I think it was too long. I'm going to pop the link in there into the video description box. Just let me know if it's too long. I'm thinking about even taking it down and cutting it up a bit. Because who has 43 or 47 minutes, I forget how long it is, to watch a video? I just dropped the link into the box. But thank you, Paul. I appreciate that. So getting back to gold, I'm becoming more and more constructive as we hold 1900. And I didn't forget, folks, we're going to go over IBM in a moment. The Nasdaq 100. We booked profits on our hedge, our short position on the trip Qs yesterday. We did the same last week. Now, I got to be honest. I'm thinking about reshorting the Qs at the open today, or very close to it. Because what we're doing here is, yes, we rallied off the lows. We became oversold yesterday. I mean, take a look at a 15-minute chart. You had RSI down below 20, Stokes tapping once, twice, 3 times into its third standard deviation Bollinger Band, a dead cat bounce, which is inevitable. Now, we rallied up and into resistance, and we've spent the past several hours flirting with a breakout, unable to do it. So what you can interpret here is that we have a lot of traders buying the dip. We covered shorts down here. They bought the dip, betting that we're going to get a new rally up higher, and we may just get it. But absent a deal, it ain't going to happen. The market needs heroin. This is not a real organic market. It needs heroin. For anybody delusioned by the fact that this is an organically vibrant market, please, you got to step back. I mean, there are certain sectors, I mean, transports, other areas where you see, I mean, the airlines closed up yesterday. You're seeing glimmers of hope. And I think that's a reopening hope, and it's also a play on the supply chain shift from China to the rest of Southeast Asia, Mexico, and to a certain extent, maybe the United States. But beware here. This could quite very well be a dead cat bounce. And as J.A. just said, it may be best to fade the rally. But use a tight stop just in case that deal comes out. And you're going to see a tremendous amount of heroin get pumped into the system. And don't be short. Don't be short. Let's pull back here. Back to a 4-hour chart. S&P 500. You know, same deal here. I mean, until we start putting in higher lows and higher highs, I mean, this is not overly complicated. You know, technical analysis, people want to overcomplicate, and it's very simple. I mean, technical analysis 101, don't worry about your RSI, don't worry about anything else. Simply watch price. Are we putting in lower highs and lower lows? If we are, avoid. Even if you don't know how to short, don't short, just avoid, sit in cash. So we're putting in lower highs and lower lows, and until such time as we break out above resistance levels, well then, you don't want to take a position. If you're going to take a position, stay very small. Test the market. If you're wrong on that test and it goes against you, guess what? You're wrong. And it's okay to be wrong. I'm wrong all the time. But we don't want to go magnifying our position by adding to it and averaging down. It's okay to average down, but have a rationale to do so. Meaning, you've pulled back, consolidated, you're getting signals by the market to begin adding more because it's safe to go back into the water and to add more. Right now, I would not be averaging down on the S&P 500 at all. 1 1 because I'll go to, you know what, let's skip this. Let's go to the closing price action. This is for the benefit of members yesterday. Because as I mentioned earlier, my market wrap did not come out well. The video scale was off, and the sound was good, audio was good, but the video was like a thumbnail. It was ridiculous. So let's go over it. Yesterday's price action. These are closing charts as of yesterday, and the 10-year yield. The polls have Biden winning, but no matter who wins, the market will fall. I see the S&P falling to 3,200, maybe 3,100. I'm torn. I don't believe the polls at all. And honestly, if it's a truly honest election and Biden wins, this country's done. We're done because we have an uninformed political base. I'm sure I'm going to get a lot of thumbs down on this, but let's face it, folks. The guy's a potato and crooked to hell. So I'm probably going to get a strike against me for saying that word. You know, I get why people might not like the abrasive personality of Trump, but let's face it, at least Trump didn't get caught with his hand in a cookie jar. So I digress. They're going to demonetize me, no doubt, on this video. All right, so 10-year yield. We popped up higher on the week. This is a weekly chart, folks. I mentioned this over the weekend with members that we would probably pop back up because we filled a gap, which is filled from the week of August the 31st. Now it appears as though we're going to head up higher. The TLT, the 20-year bond ETF, gap down yesterday. Yes, we closed off the lows of the session. Way too early to call this rally over, but a bit concerning. We are not in a downtrend per se. If we break down below 158.68, expect yields to spike and bonds to drop like a rock. The VIX shot up higher yesterday, closing at weekly resistance, or I should say bouncing off of weekly resistance. This is a powerful chart. Let's go to the weekly chart. I mentioned this over the weekend with members that beware the VIX. Here's the closing price action last week. And I warned that we were either breaking out or breaking down this week. The probability of a breakout was fairly high. Guess what? We broke out. Big breakout. And here's that upper band of resistance I just mentioned where we stopped dead at it. Higher lows in RSI, no breakout to new higher highs. Therefore, no buy signal on VIX quite yet. Way too early in the week. Now, here's where I become a bit more cautious on precious metals, and I look towards a deflationary trade to make money. Why? Because TIPS, Treasury Inflation Protected Securities, they broke down to new weekly lows yesterday. Let's go to a weekly chart. We took out the lows of last week. We have a potential for a lower high. Now, why does that matter to gold? It's because gold and the TIPS trade in tandem. Sure, you have periods where one outperforms the other. But overall, the macro view is that if you're seeing inflationary concerns abate, well then, you're going to probably see some weakness on gold. And we've seen that of late. The only positive talking point I have about gold for the past couple of weeks is that it's holding the 1900 mark. The dollar gap down. It is weakening this morning. We'll see how it closes out today. I like to use closing price action primarily. As I always like to say, it doesn't matter where you trade intraday. What matters is where you close. And that's why we do market wrap, to identify how we did on a daily time frame. And that's why I do the week ahead commentary, to identify how we close on a weekly time frame. That's how you establish what your strategy should be. Way too much noise using intraday charting. I'll leave that to the day traders. And there are some very, very good day traders out there. I'm not knocking them. I'm just not a very good day trader. And the statistics are horribly against successful day trading, especially nowadays with algorithmic trades or trading. The Dow Transports, this is a daily chart. Bearish key reversal. This is one of my 5 top powerful candlesticks. And the probability of fading today and making lower lows absent a deal, very, very high. Beware the bearish key reversal on the transports. Volume rose, but still below average yesterday. Dow Jones daily chart broke support. Now keep in mind here, the bigger concern about the Dow, if we continue lower, is that we have a potential double top on a macro basis and on a micro basis. We had a micro top here on the 12th of October, another micro top on the 16th. Now, yesterday, we broke support levels. Now, it really doesn't concern me until such time as we start breaking key support. Key support, where is it? Right where we closed yesterday, right here at 27,305, thereabout, and especially at 26.5. We break 26.5, it's all over. Now, if we get a deal, would I be shocked to see a breakout? Nope. But that's manipulation of the market. That's not organic demand for stocks. S&P 500, very similar to the Dow yesterday in that it faded on the day. We had promise in the pre-market. By the end of business yesterday, it was in free fall. So beware the pre-market futures. They can send you false positives. They want to get you excited. That's the purpose of CNBC, to get you excited. They're cheerleaders. Don't get cheerleaded into this market. It's way too dangerous. We broke support. Volume declined relative to the down volume on Friday, which is good to see. We had big volume on Friday, declining down volume on Monday, but the price was very bearish. We broke support. Trip Qs, we covered shorts yesterday on the Trip Qs. Potential double top here. Natalia and Keith. Is this Natalia or Keith? I never saw people put both names. That's interesting. Well, welcome anyway. Isn't it an inverted falling angel now? I've never heard of a falling angel. I got to admit it. I've been doing this for over 25 years. I've never heard of that. Nadia, I'm sorry. I saw the I as an L. My apologies for mispronouncing your name. And a female, no less. Thank you for being here. We always appreciate a bigger female audience. My demographic is like 90% male. Love you guys, but we got to get more ladies here. Way too much testosterone by you savages. We need some estrogen to dilute that testosterone. I love it. So I'm not familiar with what a falling angel is. I'd have to look that up, to be honest with you. But if you want to give me a little bit more detail around it, I'll be more than happy to take a look at what chart you were referencing, and we'll take a look at it. I'm always interested. We're very, very open-minded here. Let's take our crayon out. Watch this resistance level. We have a potential lower high. And this doesn't matter per se until we start breaking down to new lower lows. It doesn't help that we broke down to a new weekly low. That I can assure you. But the week isn't over yet. And the threat, to shorts anyway, the threat of a $2 trillion pipeline of cash being funneled into the markets is all too concerning to lean into the short side of this market. So I'd rather that news come out, See how the market reacts, and then take my cues from there. If the market on a news of a $2 trillion stimulus package breaks down to new lower lows, well then, that's a big problem. I will see it if a picture representing it will show it. Thank you very much, Nadia. Very pretty name, by the way. IWM. Small caps had a fairly good week last week with that bullish reversal bar here. We stopped at resistance. But yesterday, after attempting to break out, and again, beware of the pre-market futures. They spike the market higher, only get sold into. Wait for the close above this resistance level before you execute a trade. And you don't necessarily have to wait for the close. Wait for the final minutes of trade to ensure that you don't get a deluge of selling in the last half hour, taking you down below what appears to be, going into the 3 p.m. hour, a breakout. I've seen all too many times a rally, a strong day, and all of a sudden a deluge of selling in the final minutes of trade, taking you off of what appeared to be a breakout, then is rejected. Be very careful in this market. Down volume rose on the small caps. The banks, I got to tell you, I was concerned yesterday about the banks. You saw yields rising, and that benefits the banks, yet the banks were weak. They were down with the overall market. Yields are rising yet again today. The banks had better do very well. If they continue to break down here, I shouldn't say continue to break down. If they continue to weaken and they begin to break down, that's a problem for the banks. You had money center banks reporting last week, regional banks reporting this week. So beware. Rising yields and weak banks do not go hand in hand. You want to see rising yields and rising banks. That improves their net interest margins. XLK Technology, we've been warning about this along with the Qs. Technology, especially with rising yields, is very concerning. We have a new weekly low. Take a look at your RSI here. Ah. See how we've broken support. We're still above the 50 mark. But, the way I would interpret this is this. Don't buy here. Don't initiate a new trade. You may not need to sell if you're holding for the long term. If you're a short-term trader, I'd be selling. But if you're an investor looking for a long-term entry point, this is not it. Your technicals are breaking down here. And we are solely reliant upon the welfare being distributed out of Washington, D.C. for this market to continue up higher. Consumer discretionary rejected yesterday after attempting to break out on a weekly time frame. The prior week, daily chart. New weekly lows. Volume muted, but it rose versus Friday. Energy, not a good day, but we remain in a downtrend channel, which is orderly. We know the lower band it must hold. We know the upper band where we want to add to an energy trade. Right now, we're in no man's land. We're breaking down an ultimate oscillator. Excuse me, folks. Oil down about a 0.5 percentage point yesterday. No new daily low, despite the fact being down a 0.5 percentage point, and it was down on light volume. This is biotech, but this is a leveraged ETF, so it was down 6%. But keep in mind, it's a 3 times leveraged ETF. But the price action was not wonderful. We have potential lower high, no new lower low yet, holding support. So this is simply a watch at current. Gold, daily time frame, faded on the day with a weak dollar. That's a concern. And our Stokes on a daily time frame, they're weak. And if we close out the day, which we just may, close out the day below 50, that's a problem for gold, folks. We'll revisit this. But that's a problem because when you have your stochastics and your RSI, which the RSI is already down below 50, and putting in lower highs below that level, rallies tend to fade. Rallies tend to fade. So don't get caught up in a spike in gold, if we get one, until we see a close above, at least on the GLD, above 180 and these Stokes and RSI resolve. We need to see RSI back above 50. We need to see Stokes back above 50 or the bare minimum flattened out. As long as these continue in a downtrend, avoid like the plague. Spot gold. Oh, this is the GDXJ. Sorry, I did this last night on Market Wrap. I went to spot gold next. All right, we'll just go to the GDXJ, of which we have a small position. We booked profits on most of our position a couple of weeks ago. And this is not my annotated view. Let me go to my annotated view. All right, so this is more illustrative of where my mind is at on the GDXJ. You're welcome, Nadia. All right, so we have lower highs within a trading channel. We're in no man's land right now. Bearish price action. I want to reload up on the GDXJ, ideally before the election because I want an insurance policy. Because this is the Pimp Mac Daddy of all cluster Fs of elections. I never thought I would live to see anything like this. Now, what I've set up here in orange, like tripwires within a trading channel, and they're like an early warning signal of whether or not we're going to break out or break down. Nothing really per se to trade off of. It's more of a heads up that we're beginning to see relative strength as confirmed by the indicators or relative weakness. Right now on this chart, the GDXJ is showing that we broke down below a tripwire within a trading channel and that the probability of lower lows is fairly good. Now, the indicators are not as weak as gold RSI is, but not the Stokes. Stokes is still above 50, but they are weakening. So beware, folks. Be very careful. Technical analysis is not simply about knowing when to enter a trade or exit a trade. It's identifying when there's danger out there, and it's simply time just to sit, watch, wait, and let everything play out. Uranium, of which we are long, spiked up higher yesterday, topping action at the $11 per share mark, 20-period moving average, acting as a declining ceiling. No shock there. Let it consolidate. I love the Stokes. This is what you want to see at the bottom of a trading range. I mean, you don't go loading back up or opening a big position on this event, but it's nice to see. You're getting higher lows, no breakout yet to higher highs, but it's good to see. Higher lows in RSI. This is healthy. We broke out here. All is right with the world. Popcorn, pixie dust, all is nice. Trending in the right direction. The big gorilla in the room is, of course, overhead supply. Now, a threat here is the potential for a head and shoulder setup. Left shoulder, head, right shoulder. I don't think we're going to get it, but identify your risks. And that's why I keep all my annotations to remind me, look out below. Rocket Mortgage, not behaving well. We're going to hold this position because the housing boom is for real. I think they took it down with the rest of the market. We already went over the banks. Boeing took it on the chin yesterday a bit, holding support. Stokes down below 50 until those are resolved. I don't want to add more here. It was going to stay small. You're probably going to see some weakness until these Stokes are resolved and they hook back up. U.S. Steel, relative strength yesterday in that what we did, and this is why it pays not to go chasing, even the strongest of stocks in a weak market. Look at what happened yesterday. They spiked it higher in the morning. If you would have chased it, you would have possibly chased it above its pivot point here at 9.25. And then by the end of business, you would have closed back down below it. You'd be sitting there licking your wounds right now. Wait for a close. If you're looking for an entry point on U.S. Steel, we have a position here, but our position's from down here. So I could sit and wait this out. But if you're looking to initiate a new trade here, wait for a close above 9.25. I'm going to talk about Twitter right now because they're probably going to hammer me on this video because I talked politics. I took down one of my videos the other day. No explanation. Very disappointed in YouTube for doing that. And I'm assuming it's because I talk politics, so they'll probably pull this down because it's not, believe it or not, child-friendly. It was a live stream. I'm not like that dude that was on a Zoom meeting yesterday from CNN. I mean, come on, give me a break here. Let's go to Twitter. Twitter is a poster child of why there's going to be massive regulation. That's Twilio. Great stock. Twitter, not so much so. You're seeing a ton of topping action because Jack Dorsey is soy boy gone nuts. He's about to destroy his own company. Here's a guy that believes that being woke is going to protect him from the Democratic Party, and nothing could be further from the truth. They're coming. Knives are out. Power knows no friends. They have the power. This guy's displaying power, and they are going to take him down a notch no matter who gets into office. They have way too much power. So we went short of Twitter last week. I didn't add to it yesterday. It did show relative strength yesterday. But I think that we are going to weaken up here, especially if they continue with their draconian policies of cracking down on the President of the United States and the media. These guys are regulated as utilities. They promised, for all intents and purposes, not to edit. Just as if they were your phone company. But they killed the goose that laid the golden egg. And they are going to pay for it. I don't care if it's a Democratic Congress and president. Either way, there's going to be hell to pay for these people. It goes back to the story of when J.P. Morgan, this is prior to the Federal Reserve, J.P. Morgan, the J.P. Morgan, not the company J.P. Morgan, the J.P. Morgan bailed out the U.S. government. What was his thanks? They created the Federal Reserve because they were ticked off that he had so much power to bail out the U.S. government. So there is no thanks for what he's doing for the Democratic Party. They're going to rein him in. So Stokes trading down below 50. Rallies tend to fade. We're going to be looking to lean into the short side on Twitter. Look at the up volume yesterday. Very, very light. So these are the technicals breaking down on Twitter. Very true, Nadia. And I'm probably going to get here. Let me type in the word. I can't even say it anymore. It's kind of weird, man. In all the years I've been doing these videos. It's never happened. There you go. That's what I'm living with now. There will be a problem with me doing this this video, guaranteed. They either pull it down or demonetize it. All right, that's it, folks. Everybody have a profitable trading day. Beware of the bright green futures. Let's make sure that they close there. That's what's important, not where they trade intraday. What matters is how we close. And then we'll take our cues from the closing price action, from closing volume, and ideally, and I thought it's a good thing, net for the country. The markets, speaking of the markets only, the markets need a heroin injection. If we don't get that heroin injection, expect a sell-off. So please be very, very careful here. This is a very dangerous market. Everybody have a profitable trading day. If you could smash that like button, it would really help me out with YouTube. So thank you very much, and be well.